Alrighty, what's going on, team? It's Ricky with TechBit Solutions. Hope that you guys are all having an amazing Wednesday, September 21st. Who is ready for the FOMC meeting? We have that live in just a couple of minutes. It's going to be 2:30 p.m. Eastern time, where they're actually going to host the live stream. So let me go ahead and refresh this. But the report should be released in simply 11 minutes from right now. What's up? What's up? Good afternoon. How are we all doing today? Doing good, feeling good? All right. Let's go ahead and make sure everyone is alerted that we're going live. So we're going to post this right now on Discord, posting it on Instagram as well. So let's see who's ready to make that money. So we talked about preparing in advance. It's very simple. You either reduce your position size right now if you don't think that you can tolerate a pullback, or you just decide to hold, right? You know that you had time to prepare even right now. If you cannot tolerate a pullback, you should simply either reduce your position size or not be invested as of right now in the market, because this FOMC meeting will influence the market in either a positive or negative way, right? What's going on? All right, test, 1, 2, 1, 2. And it's not even just for traders, but it's also for investors, right? If you're brand new to investing in the stock market, you might be invested in a couple different positions, but it's super important to understand that things can get worse before they get better. You just need to respect that. You don't need to agree with it. You just need to respect it, right? So you watch your position size, and watching your position size is a great way to be able to manage your risk, right? So let's say that you trade or invest with $10,000. If you were only invested with $500 and you have a $10,000 account, you could be invested right now. And even if the market drops 5 or 10%, you're only in with $500. So you can tolerate that pullback, no question about it. And it's all because of position size. So if you've been trading in the market for some time or investing in the market some time, you know the importance of position size. That's the only thing that I try to preach in every single video. I am someone that's a creature of habit. I am very repetitive. I say the same thing over and over again because a lot of beginners watch my video. It might be your 5th video that you watch of me, but for someone, it's going to be their first, right? And I am here to look out for the beginner investor and the beginner trader. I do not send out call outs. I do not tell people where to buy or when to buy or what stocks to buy. I'm not here for that. I feel like there's a lot of different ways on how to make money in the market. I am simply here to talk about 2 things: position size and risk management. The 2 most important things that people tend to overlook, right? So while everyone else is going to encourage you to buy this, buy that, I do not care, right? You're an adult. You do whatever it is that you want with your money. All I'm here to remind you is to hold you accountable. Watch that position size. And again, never be afraid to manage that risk. So let me get a show of hands real quick. Let's see how many people we have in this. So we have 2,700 people so far, but we only have 200 likes. I thought you guys wanted me to host this live stream next month and the month after that. How am I supposed to only do it when 200 people drop a like? It's not very encouraging. I don't know about you guys. Here we go. What's up? What's up? How we doing? Let's see how quickly we are at 300, 400. Can we hit 500? I really do appreciate it. Again, it doesn't cost you anything, right? And it really helps out my channel. I appreciate your guys' time. I hope that you appreciate mine. If you have any questions about what we talk about today, you should be able to see it pinned in the live chat. It's my Instagram. You can send me a direct message at any time. I tend to respond within 24 to 48 hours. If you message me over the weekend, it's going to take some time. I have a newborn, or I guess she's not a newborn anymore. She's 8 months. 8 months and 2 days. No, she's going to be 8 months in 2 days. But yeah, so again, in just a couple of minutes, we have the Federal Reserve FOMC minutes meeting. So please make sure that you are aware of that. There it goes. 3,200 people in the live stream, 1,400 likes. Yeah, let me get a show of hands. Let's make the live chat look like a matrix. What do you guys think it's going to be? Do you think it's going to be half a basis point, 0.75, or a full basis point? What do you guys think? Half a basis point, 3/4 of a basis point, or a full basis point? Let me see. Woo! Look at that live chat. Oh my goodness. I'm seeing a lot of full basis points. Check that out. Love to see it. There it goes. Well, in 7 minutes, we will be finding out. So let's make sure that we are prepared for that. One of the things that we always talk about is preparing for worst case scenario. And I would like to say that, I've really tried to hold myself accountable and making sure that I've made it very clear. I'm sure you guys have been super tired or maybe annoyed in my past 4 to 5 videos. All I keep talking about is prepare, 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 prepare. And trust me, sometimes that repetition is just what someone is needing, right? How many times have you guys held during a FOMC minute meeting or a CPI data report, and then you end up regretting it, right? Yeah, maybe sometimes you get lucky, but even the lucky feeling of when it is in your favor does not outweigh the horrible feeling when it's not in your favor, right? It's just, I like thinking about worst case scenario. I hope that you guys know that. I think it's the most important thing to talk about. It's the most important thing to prepare for. It's good when things go according to plan, but it sucks when it does not. So our job is not to predict the future. Our job is to prepare for it, right? So I'm prepared. I reduced my position size. I am ready to go. Again, I do have an open position, but just because I have an open position doesn't mean that I'm fully invested. I'm in right now with a fraction of what I normally trade and invest with. This is how I manage my risk and how I manage my position size. I talk about this over and over again. You should never be scared to be invested. That's not the point of the market. You will never time the market perfectly. That's not what I'm trying to do. What I'm trying to do is, if the market sells off, that I can tolerate it. That's all. That is all, that is all, that is all. So sold half of Tesla shares prior to the meeting. And again, you don't even have to do that, but you're thinking about worst case scenario, because worst case, if the market does go up, you can always get back in. Best case, if the market does go down, you've sold half and you can get back in at a lower price. So think about it. Weigh out your options. Worst case scenario, best case scenario if you prepare. And now think about best case scenario and worst case scenario if you don't prepare. So will you be streaming the speech? What do you guys think? Should we live stream the speech? Because the speech is going to be at 2:30, which is going to be about 30 minutes after the report is released. I don't know. We have 1,600 likes and we have 4,600 people in this live stream. If this video gets 3,000 likes, I'd be more than happy to host the stream. But 3,000 of you have to drop a like. I've seen 1,600 of you already drop a like. I appreciate you guys. Make sure that you guys subscribe. I upload very simple stock market videos every single day. And I would love to continue to host these free live streams. And again, if you have any questions, you can always just direct message me on Instagram, and you should be able to see that in the top pinned post of the live chat. So there it goes, 1,900. We're only 1,000 away. We're at 2,000 likes. 2,100 likes is where we're at right now. We have 3 minutes left until this report is released. Let's see. Here we go. All right. Here we go. So we are making new highs on the Nasdaq market. So this is what we're looking at right now. New highs on the Nasdaq market. It looks like it's trying to push up right before the FOMC minutes meeting. This is the part that kind of concerns me, right? Anytime that the market moves up right before, it's just a little concerning. I'm going to sell another 1,000 shares. I'm just thinking about worst case scenario. You guys please do not copy me. It's not about that. I'm just preparing for worst case scenario, and it's a little bit more on the overbought side. There it goes, selling 1,000 shares. So let's go ahead and wait and see. So a lot of people think that the market's going to sell off. I think that anything is possible. You guys know that I'm very optimistic. I'm very level-headed. I do not care what I'm invested in. I always try to think about worst case scenario. So, all right. We have 2 minutes left. 2 minutes. Let's see how many likes we have. 2,200 likes. Oh, 2,500 likes. We are 500 likes away, and we can continue to host the live stream. I like it. There goes. We have 5,600 of you. I really do appreciate you guys taking time out of your Wednesday and joining us. So it's going to be super interesting to see how the market reacts, and I'm just making sure that we're prepared. So again, all of this is coming to you directly from the federalreserve.gov website. I love sharing this information with you guys because not only do I like to share it with you, but I want to make sure that you guys never feel that you guys need to be dependent on me, right? I think the beautiful thing about doing anything well in life is being self-sufficient. Never be told what to do, but understand why and how to do something, right? That's the real way in being successful. It's to be self-sufficient and to not be told what to do. I will never tell you where to buy. I will never tell you where to sell. Nothing like that. So give my man 10,000 likes or bring back Ask Kiki Bobby. What's going on, Umar? What's up? What's up? I appreciate it. All right. So long for the Lambo. I like it. All right, guys, we got 1 minute left. 1 minute for this thing to play out. Here it goes. 2,800 likes, 6,000 people, and whoa, what's going on here? It looks like we are bullish. Check it out. Wait. Nope, we're dropping. Here it goes, 11 a.m. There it goes. Market's dropping. Wait. Market's still trying to choose its direction. Please be selective. Please be careful. Here it goes. All right, let's see what's going on. Come on. There it goes, making new lows, dropping like a rock from green to red on the day. Check that out. This is why you watch your position size. One of the things that I love to do is to get into it at oversold levels, but I'm watching my position size. I am so happy that we prepared for worst case scenario. Check that out in 1 minute, that shift of change of direction. This isn't actually as bad as I thought. We're not actually selling off as aggressive as I thought. So I'm just buying 250 shares. So you guys saw that I sold much quicker than I'm buying. And I want to be very careful with this. So 0.75%, that's what it's telling me right now. All right, here it goes. There it goes, making new lows, second red candle. There it goes. Testing. All right, it's already beginning to recover. Watch carefully here. Watch carefully. Yep, to my understanding, it's not a full basis point. Let's see. Let me refresh this.
In economics and finance.
All right, so they're getting ready for the live stream here. I'm super excited to hear Jerome Powell speak. All right, there it goes. Beginning to indicate signs of a reversal already. The market did react. How many of you guys prepared for this? Let me see a show of hands. Are you guys happy that we prepared for words? Excuse me, I'm choking because I'm so excited. Again, the only people that freak out during a market pullback are those that simply did not prepare. There is no other excuse about it. You can say, well, I thought this was going to happen. Guess what? No one ever knows exactly what is going to happen. And this is simply why you prepare for worst case scenario. Because even if this thing would have taken off, who cares? You can always get back in. It's always protecting your downside. And I know it sounds super boring. It's like, well, what's the fun in that? The fun in that is that you protect the money that you've already made. Your job as a trader, your job as an investor is not to be perfect, is not to avoid risk. Your job is to manage risk. Your job is to prepare. So let me double check here. All right. Yep, so it is announced interest rate hike by 0.75 basis point, 3.25% versus 2.5%. Previous estimate, 3.25%. So they did not do a full basis point. They did not. are you not going to update this? All right. Jesus. My gosh. Here it goes. Still selling off, hitting lows of $24 a share. Let's be honest, based off of previous lows, I mean, we're testing previous lows. And guess what? Do you guys know what's going on right now? Did we not talk about this? Even if they did do a 0.75% interest rate hike, we talked about it. You cannot be surprised if the market still sells off. This is the part that people do not understand, is that, well, I thought we factored this into the market. Guess what? It is still bad, right? It is still bad that we have to raise interest rates so aggressive. And there it goes. Market is still dropping. This is why we prepared. You can prepare as much as you want, right? We've seen it with earning reports. We've seen it with any kind of news, any kind of reports. They can announce anything, but it's all about how the market interprets that report or that news. It's all about how the market reacts. Down 3.4% on the day. Check that bad boy out. Here it goes. SQQQ from lows of 47.50 all the way to highs of 50.85 and rising. This is the triple leverage bear ETF. This is not an investment vehicle. This is not something that you want to buy and hold for a long period of time. But obviously with days like this, it makes it very interesting to make some money. Here it goes, buying 500 shares, drop it like it's hot, drop it like it's hot. If you're part of my Learn Plan Profit group, I talked about it right before this live stream. I talked about reducing my position size. I sold 2,000 shares. I sold 2,500. I sold another 2,000. And then I sold 4,000. Why would I sell so many? It's because of uncertainty. Yeah, we might have to do party mode. I don't know if you guys are lucky enough to do party mode. I don't know. What do you guys think? Lucky enough to do party mode? Woo-wee. I love to see it. This is what we prepared for. Again, I'll say it again. The only people that freak out, the only people that get upset when the market pulls back are those that did not prepare. We all know that. It's that simple. Because right now, all I'm seeing are discount. And yeah, it doesn't mean that you have to buy in blindly. It doesn't mean that you have to go all in still. I mean, still keep your principles of position size and risk management. But if you think about it, if you kept trading simple, if you kept investing simple, all you had to do was wait. All you had to do was wait for the market to react. Because at this point, I mean, and being completely honest, this 3% drop on TQQQ is nothing because this is triple leverage. This means that the Nasdaq market's only down 1%. And being real with you, that's not very much. Can the market continue to drop? Of course. But if you're freaking out with this, I mean, check this out. Even Apple's dropping. Apple from 158, what was this drop? Let's see, it has to be like 2%, right? Yeah, 2%. Quick math, here it goes. Amazon. Love to see it, 2.4%. Meta's a little bit weaker. Let's check this bad boy out. 2.5%. Let's see Tesla. Where are my Tesla fanboys? I'm a Tesla fanboy as well. I mean, so don't get offended if I said that. 1.5%. This is not bad. Again, this is the beautiful thing. I mean, I just want to wait for indication of a reversal. I'm going to stay patient for that indication of a reversal, and then we can wait for it to happen. All right. Here we go. All right, you guys got me to 3,000 likes just like I asked. You guys made it happen. So I will host a continuous live stream. I will continue to go live for the next 30 minutes, probably for the next 45 minutes. You do not have to stay here if you do not want to. I'm not going to be like, you have to stay here. No, but if you want to hear Jerome Powell speak, if you want to hear the head of the Federal Reserve speak, I think it would be something worth listening to, at least for me, right? It is for me, and that's why I'm going to stay here. I know it's going to be for a lot of you guys as well, and I'd love to have you here. So the speech is in, 22 minutes. It is a long time from now, but guess what? by the time that he speaks, what if the market recovers? Ooh, check this out. Oh my goodness. Already indicating signs of reversal. This is as simple as it gets. The 3 stages of a reversal. There it goes. Buying 500 shares. Let me buy another 1,500. This is $36,000 worth of TQQQ. Buying 1,500 shares. Again, the MACD looks good. The RSI looks good. We prepared for this. We prepared for this. And again, these are day trading shares. So I saw a comment right now of like, there's no way he's going to buy and hold these. You are right. I'm going to buy them. And then if they get close to the moving average, then I'm going to sell them, right? So if you look at overall lows from lows of, where did I start averaging? Right around here. That's about a 5% margin. I don't know about you, but 5% is pretty decent for me, especially with the dollar amount that I trade with. I have my position that I'm already deciding to hold. I'm not holding any of the shares that I'm buying today. Not one bit of them. I understand. I mean, even if the market fully recovers today, which it is possible, I do not care about that. It is very early on. The market is still uncertain, and I understand that. I need to respect the risk and the volatility that's bound to happen. And look at this. The VIX is still in the red, to my understanding. Let me double check this. Yep, still in the red, so that's good. So if you guys are unaware, VIX is the S&P 500 volatility or fear index for those that are aware of it. And anytime that it drops, the market tends to rise. And I'm actually very surprised that it hasn't. I don't know if mine hasn't updated, but the VIX hasn't really risen, right, or isn't rising right now. And normally it rises anytime fear is being injected into the market or volatility is being injected. All right. Let's see where we're at. Here we go. All right, showing slight signs of a resistance, so let's be careful here. Watch your position size. We are not making higher highs anymore. So again, we're showing signs of lower highs, which is not a good sign. All right, I'm going to host the live there. I'm just going to make sure that we have the music in the background, I guess. I just want to make sure that when Jerome Powell begins to speak, that we are ready. Just made $700 on that SQQQ balance. I like that. How many of you guys have locked in profits on SQQQ, or are you still deciding to hold? Because when he speaks, he could shift the market, right? He definitely can shift the market. So you need to make sure that you are aware of that. So much speculation in the market. Jesus. It's beautiful. What do you mean, Jesus? It's beautiful. This volatility, that's why the markets are dropping, because there is uncertainty. Isn't that when the big money is made? Do you think that the big money is made when we're at all-time highs? No, people have already made their money, right? Now is the time to prepare, not to buy all in and go all in. It's not about that, but now is the time to prepare during uncertain times. Why do you think it's called, it's risky, correct, because it is uncertain. You think that you're going to be, with conditions being super favorable and with market being super certain, you think that you're going to make, or you should be making money then? No. Come on, you have to understand. This is how the market works, right? This doesn't mean to go all in. This doesn't mean that you should blindly buy just anything randomly. You should still be selective. You should still watch your position size, but you shouldn't be afraid to take advantage of an opportunity, right? It's very easy. Every previous recession is viewed as a missed opportunity. Every current pullback or current recession is viewed as a risky time to invest. It's all perspective. That's all it is. It's once you experience this once or twice in your lifetime, right? You understand that it's not that it's guaranteed that you have to make your money back, but that you know that you're in at a good price point. And if you can tolerate the time that it will take for the market to recover, then you're in good hands. Right? What do you guys think? This is my favorite time. This is my first time here. What is going on, Michael? We have a lot of, so love from India. Thank you. I appreciate that. I was like, maybe we should do, a little giveaway or some form of incentive. I don't know. Maybe we shouldn't, but all right. Looks like we have a little bit over 8,000 people here. Really do appreciate you guys joining us. Again, friendly reminder, make sure that you guys subscribe. I host these free live streams anytime any major economic report is hosted. So anytime that there's an economic report, if it's a CPI data report, I keep things super simple. I explain things so even an absolute beginner understands why inflation is rising or why inflation is dropping, or how to read one of those reports. So if this ever has been something that you've wanted to get into, I upload a bunch of free videos on YouTube. I'm one of the largest YouTube channels for those who trade in the stock market. I have a little bit over 1 million, and I would love for you guys to be part of the family. So make sure you guys follow me on Instagram if you guys haven't done so already. And it's going to be pinned in the live chat, or if you refresh your screen, everything is linked in the description. We actually have a sale going on today, 2 sales. So I trade live every day with my Learn Plan Profit group, and that's the second link down below. So they get to see me enter, they get to see me exit. This happens every day right at market open. If you've never seen me trade live, I would encourage you to click the second link, learn a little bit more about it, and see if it's a good fit for you. Right now, we are running a $100 off sale, which is one of our biggest sales that we offer. The second thing is, for the apparel side, you guys can use promo code FED, and that will earn you 25% off your entire purchase. You can buy a mouse pad, you can buy any of these flags, and it will get you 25% off. So just want to make sure that you guys are aware of it. Just use promo code FED at checkout for the Shop Tech Bud site, and you should be good to go. So do you think that it will drop to 16,000? Check what that what will drop to 16,000? Are you talking about the Nasdaq? That the Nasdaq will drop to 16,000? We are waiting for Powell to speak. That is correct. Big fan from India. What's going on? I appreciate you. Thank you. Thank you. Market sentiment. Yep. All right. Let's watch that position. It looks like we're retesting that same support. Going to buy 500 shares down here at an average price of a little bit below $24 a share. Please do not copy me. I'm not going to be like other YouTubers. Do not copy me. I'm not here to convince you to trade the same thing I'm trading. Just because I can tolerate or manage my risk a specific way does not mean that you should copy in the same footsteps. We all see value in different ways. And if your first instinct is to want to copy me, that's a huge red flag. You learn nothing by copying. You learn everything by understanding. That's the whole point of my daily live trading sessions. When I trade live with my Learn Plan Profit group, the idea is for them to understand my thought process behind the trade. So anytime that I'm about to buy something, I explain it. Anytime that I'm about to sell something, I explain why. That's what I want you to understand. In a world full of problems, learn to be a problem solver. And with that, you must always understand why. So again, please do not copy what it is that I'm doing, just because if you agree with me and you like where we're at right now, then sure, we can be trading the same thing, but never do something just because I simply did it. All right, we have 14 minutes left. 14 minutes left until the Federal Reserve FOMC minutes meeting. Any guesses? Any guesses up or down? The market already went down, right? So market already pulled back. We're down about less than 1% on the overall day. But Jerome Powell should be speaking in about 13 minutes. 13 minutes, he's going to be speaking in this FOMC press conference, and he's going to pretty much just give a little bit more insight on their decision for the 0.75 of a basis point interest rate hike. I'm not here to make any predictions or set expectations. It should not matter to you about what I think. That should never be, it doesn't matter what I think. They're going to report and say what it is that they want to say, and the market will react. I can think anything I want. At the end of the day, I'm irrelevant to the stock market. Our job is to react. That's all. I don't care about my opinion and my belief about what I think they should do. I'm irrelevant. I'm not in Jerome Powell's chair. So why pretend for me to be, right? For those that are unaware, the interest rate hike is already announced. They announced the 0.75%. So everyone that's saying that a full basis point, they're not doing that. So they're doing 0.75 as expected, right? That's what was factored into the market, which is why I don't think that the market sold off as much as it, originally anticipated. Powell is going to say the same thing that he's been saying for the past 5 months. Probably. Yeah, I mean, he's a creature of habit, right? They're trying. I don't know what was said. He's such a clown. I think we can all agree, and even they've said it themselves. they're a little bit late to the, not a little bit, they're pretty late to the idea of fighting inflation by raising interest rates. They are late. They've said it. They've admitted fault. Now they're just trying to catch up, right? They're front loading interest rate hikes. They're being aggressive. You can disagree with what they're doing, but again, he's in his position and they're trying to with the resources they have available. You have to understand we're never going to see all parties agree. It just doesn't work that way, right? Everyone's so opinionated and it gets so loud. There's so much noise. It's just like, everyone shut up, right? It's like, what do you think your opinion's going to do? Nothing. It's not going to change anything. It's let them try to do their job, and if they fail, then we'll definitely see it, and they can hopefully get voted out of office. So did the market not have a 75 priced in? Why down? Again, this is what we talk about. It's kind of like an earnings report. Have you guys ever seen an earnings where they beat expectation, but they still end up dropping? It's just how the market sometimes reacts. Part of it is based off of their expectation. The other part can just be also their overall guidance. And this is kind of like what is being announced today. They've reported the 0.75% interest rate hike. It's still freaking bad. It's still bad, right? It's still bad that we're raising interest rates by 0.75%. It's still not good. Yeah, it's factored in to some degree. But if you're part of my Learn Plan Profit group, what did we say? I announced that I was selling 4,000 shares. Check this out. Let me see if I can pull it up for you guys. So again, when people ask, Ricky, what's the value of being able to be a part of your private group, of watching you trade live? It's you get to hear me and hear my thought process in preparation in advance. I did not like that the market was going up so aggressively right before this FOMC meeting. I felt like it was getting hyped up. And I felt like, although I'm bullish, I felt like it was too good to be true. It wasn't even being reported yet. Why are we moving up? And, something was getting priced in. And when I looked at the previous, check this out real quick. When you look at the previous couple of days, this is one thing that I announced. Look, check this out. Check this out. This is to my Learn Plan Profit group, and I've been sending this all morning. Today at 7:25, I announced I sold 2,000 shares. I announced that I sold 2,500 shares, and I share my order, all of that good stuff. I announced that I sold 4,000 shares, and this is what I talk about. Look at the past 3 trading days. We are overbought, reducing another 2K shares. Again, just making sure that they are kept up to date. Making sure that they understand why. I don't need people to agree with me. This is my money. I can sell all of it. I can buy all of it. It doesn't matter, right? I'm just explaining why. If you look at the past 3 days, right? Today's Wednesday, Tuesday, Monday, and Friday. At the range that we were at trading, right? Resistance here, resistance here, resistance here. We were trading right around that $25 price point. I was like, this is already too good to be true. I was trying to be real with myself. I want the market to go up. I have money in the market for the market to go up. I want the market to go up more than anyone. But guess what? I'm not going to let my hopes and my desires blind my trading. I'm irrelevant to the market, and I need to respect that. So when I saw the market going up, I saw that to be an opportunity to reduce my position size at a good price point for shares that I bought at $24. I can lock in a little bit of my profits and play it safe. I reduce it, and if the market sells off, I can get back in. And guess what? We prepared for it. But I know that if the market went up, everyone would have been like, Ricky, you're such an idiot for selling early. We told you the market was going to go up. We told you that it was only a 0.75% interest rate hike. But guess what? I can't predict the future. I'm sorry. My crystal ball is a little foggy. I'm not here to be perfect. I will never be perfect. You will never be perfect. But I can always prepare for worst case scenario. And I know that I feel so much better that I reduced it because it did pull back. And think about it. Even if the market did go up, yeah, I miss out on a little bit of money, but I can always get back in. And I am implementing a healthy habit. Preparing and worst case scenario and managing my risk is a healthy habit. What do you think is a healthier habit long term? To manage my risk and manage my position size, or to be super aggressive and just hope for the best? What do you think is more sustainable? Being super aggressive and hoping for the best, hoping to get lucky, or knowing that you can be wrong. And because of that, you act upon it and you manage your position size and you manage your risk. For me, it is more important for me to take care of my downside. So Avrup, I appreciate that. Thank you, thank you. And it's not that I called it, because I know that I would have been called out for selling early and for spreading FUD, because you know that my previous 4 videos, watch all my videos, watch my previous videos. All I'm talking about is risk management and position size. I literally sound like a broken robot or like a broken record. And I get it, man. It rubs people the wrong way when you want the market to go up, but you have someone like me that's encouraging people to manage the risk. I'm long on the market. What do you think I want? You think I don't want the market to go up? No, but it's like I need to look out for beginner traders. I need to look out for people that have no experience. You know what I mean? And I'm so happy and I'm so grateful that I have the people that are part of our group that understand why I'm doing what I'm doing. And it's not because I'm perfect, and it's not because I ever will be, because I know that I'm wrong often enough that I've learned from it, right? I have failed enough in my life, and that's why I'm successful, because I've learned and have made progress. And that's what I, hope that I can be for you guys. I don't want to be someone that ever tells you what to do, because I never will. I will never encourage you guys to copy me or to be like me. That's not all I want to be for you guys is a resource of building healthy habits. We can completely trade different things. I have traders within my Learn Plan Profit group that trade options, that don't even trade ETFs. They don't even focus on tech. But it's the core habits and the core values that we have as traders of discipline and structure that bring us together, right? That we respect one another. We don't have to see eye to eye on everything. We just have to understand why we're doing what we're doing. And I hope that I can be that for you as well. I don't want you to be like me. I want you to be better. I want you to be the best version of yourself, right? And more often than not, it can be better than me. So here it goes, indicating signs of an uptrend. So I hope that you can consider dropping a thumbs up. I hope that you can consider subscribing to my channel if you feel like we earned it. And in 4 minutes, we're going to hear my boy, JP, Jerome Powell, the head of the Federal Reserve, begin to speak. Here it goes. We're about to test the moving average. We're looking good, feeling good. Ricky, why are your candles so smooth? It's because, oh man, I was about to make a dad joke, but I needed a... We have too many new people in this live stream. I don't think you guys are ready for my dad jokes. I don't know why I have good internet. I don't know what to tell you. I use the Webull trading platform. If you guys want to download this platform, I have a specific link, and the 5th link in the description. You don't have to download this platform, but if you want 12 free stocks, and if you want this platform that I use, it's free. It's available to anyone in the US, and you earn 12 free stocks by using my link. You can even just deposit $1 and you still get 12 free stocks. It is the 5th link in the description down below. It says Webull, earn 12 free stocks. Super simple. It's the platform that I use every day. So it's not just like, hey, sign up. I also do get a free stock. I get 1, you get 12, but we all win, right? So there's an incentive for you. There's an incentive for me. If you can use my link, you get 12. If you don't, then I don't get a free stock. So here it goes. Getting rejected by the EMA line. We're still not making higher highs, so we do not add more to our position size. All right, we want the dad jokes. All right, you guys said it. You guys want my dad jokes and the horrible analogies that I have, right? I like it. I also haven't had lunch yet, and I have Chick-fil-A over here. My Chick-fil-A is getting cold. But guess what? You guys asked for me to go live. I had to go live. Now my potato circles are going cold. They don't taste as good. What is your EMA line at? My EMA is set at a length of 45. I get asked this question a lot. I adjust my EMA depending on market volatility, depending on how the market is trading. I sometimes go to 35. I sometimes go to 45. I always encourage traders to explore different lengths of EMA depending on how aggressive or how slow your stock is moving, because there is not a perfect EMA length for everyone, because everyone trades different things. So, yep. Put that Chick-fil-A in the oven. Yeah, I might have to put it in my, what's it called? What is it called? Air fryer. Damn, dude. See, I need to eat. Things are getting foggy up in here. How much do you think that you spent on Chick-fil-A this year? Probably not as much as my business partner, Justin. Justin loves Chick-fil-A. So, I honestly don't even go there that much. Chick-fil-A is really good though, right? It's healthy kind of, and they got good chicken. So, fried. All right. And again, if you guys have any questions, I hope that you guys know that we also have a free resource available for all of you. So even after this video, you can even click on it right now. It's the first link in the description, and it's my free Discord group. So my free Discord group, you can direct message me at any time. If you're an absolute beginner, I do not care if you're experienced or an absolute beginner. I'm here to answer your questions. I'm here to be of value for you any way that I can. The only reason I do well on social media is not because I get the most views or because I have crazy cool videos, maybe sometimes, but not always. But I try to make myself as accessible as possible because I think that one of the biggest value pieces that anyone can be when someone is trying to learn how to trade is to be accessible for them. So again, if you have any questions, send me a direct message via Discord, and that's that first link down below. I can't answer your question. I can't connect with you if you don't reach out. So everything is linked in the description if you want to take 5 minutes and kind of review it. I'd love to stay connected with you guys. All right. Powell is coming out. Here we go. I totally forgot that we were live on. Let's see how we're doing over here. All right. I don't even know if you guys can see it okay. All right, we are. Here we go. All right, JP. Let me hear it in the live chat. Let me hear it in the live chat for Jerome Powell. Let's hear this bad boy. No one moves the market like Big JP. All right, hope you guys are ready.
Good afternoon.
Market dropping.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 of a percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust,
you guys ready?
With employment rising by an
there
average
we
of
go.
378,000 jobs per month over the
Breakout,
last 3
baby,
months.
breakout.
The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer run normal.
Higher highs. What do we do when market's going up?
Inflation remains well above our 2% longer run goal. Over the 12 months ending in July, total PCE prices rose 6.3%.
Watch for the resistance at the moving average.
Food and energy
Right here.
categories, core PCE prices rose 4.6%.
Market in the green. Market in the
In
green.
August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services.
There it goes.
Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for
don't
energy
talk
and
about
food
Russia.
and has created additional upward pressure on inflation.
There we go!
Projection
Full
for the
recovery.
S&P
Did we
for
not talk
total
about this?
PCE inflation
Did we not
is
talk about this?
5.4% this year and falls to 2.8% next year, 2.3%.
There it goes. Market
in
recovered to
2024,
where we were at
and
before.
2% in
TQQQ back up
2025.
1% on the day.
Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys
There it
of
goes.
households.
I'm
businesses,
going to
and
play it
forecasters,
safe and
as
just
well as
begin to
measures
reduce
from
my
financial
position
markets.
size. Do not copy
But
me.
that
This
is
thing
not
can continue to
grounds for
rise. It can
complacency.
drop. It's
The longer the
my
current
job is
bout
to
of
play it
high
safe. I bought
inflation
into the
continues,
dip. I'm
the
selling
greater
the
the chance
highs.
that expectations
That
of higher
is
inflation will
my
become entrenched.
job.
The Fed's monetary policy
I want to hear
actions
how
are
much you
guided
guys were
by
up.
our
I saw
mandate to
someone up
promote
$4,000.
maximum employment
Not
and stable
bad.
prices for the American people. My colleagues and I are
Here we go, slight
acutely aware
resistance.
that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Here we go.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly
Rejection,
committed to
rejection,
returning
rejection.
inflation
Watch
to our
out.
2% objective.
2.5%, 2K profit,
today's meeting, the
$35,
committee raised the
1%,
target range for
$500,
the federal funds rate by
8.3K,
0.75 percentage point,
3.4K. I
bringing
like
the
it.
target range to 3 to 3.25%. And we are continuing
7K
the
and I'm
process
all
of
out. I
significantly
like it.
reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy.
Look at that beauty.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation
All
returning
right, resistance
to
at
2%.
$25. Again, what did we say?
anticipate that
The
ongoing
past
increases
4 days.
in the target range for the federal funds rate will be
Past 4
appropriate.
days, resistance
The pace of those
$25 across
increases
the
will
board.
Continue to depend on the income.
Doesn't mean it doesn't mean that it
and the
can't break
evolving outlook
above.
for
It
the
just means that
economy.
it has been a previous resistance
With today's
level.
action, we have raised
Volatility
interest rates
is high.
by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation.
Selling pressure
We
is
will
high
continue
up
to make our
here.
decisions
Be
meeting
careful.
by meeting and communicate our thinking as
290.
clearly
I
as
need
possible.
290. I need 290.
Restoring price
Getting
stability
rejected.
will
We're
likely
getting
require
rejected.
maintaining a restrictive policy stance for some time.
I made
The
9K.
historical record cautions strongly against
I
prematurely
made 50
loosening
cents.
policy.
Hey, we all trade with different
As
dollar
shown in
amounts,
the
right?
S&P, the median
I made
projection for the
$300,
appropriate level of the federal funds rate
$3,800.
is
I like that.
4.4%
$5. Again,
at
we
the
all
end of
trade
this
with
year,
different dollar
1
amounts.
percentage point higher
$1
than projected in June.
I like that.
The median projection
13K
rises to
up.
4.6% at the end of next year and declines to 2.9% by the end of 2025.
What do you guys
Still
think I'm
above
up?
the median
What do you guys
estimate of its
think?
longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
What do you guys think I'm up?
Reducing
Let me see a show of
inflation is
hands.
likely
5
to
to
require a
7K, up
sustained period of
34K.
below-trend growth.
No, I've done the
And
math
there
in
will
my
very
head. I'm
likely
not
be
up
some
that much.
softening of labor market conditions.
4%.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at
22K,
it until we're
50K.
confident the job is done.
See, I
To
need
conclude,
that dang
we understand
breakout.
that our
I
actions
need
affect
it.
communities, families, and businesses across the country. Everything we do is in service to our public mission.
Getting
We at the Fed
rejected,
will do
getting
everything we
rejected.
can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Market's dropping. Be careful, be careful. Woo! All
Hi, Chair
right.
Powell. Thank you for taking our questions. Gina Smirlik from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular. To achieve a period of growth below trend and also some softening.
Here it goes.
in labor market
Watch.
conditions
It's
to
getting
foster a better
weaker.
balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth.
Watch your
line
position size
below
up
its longer
here.
run
Just
potential
again,
this year
reminding you
and
to
next
hold
year.
yourself accountable.
On the second, though, so
Control
far
your
there's only
emotions, because I know I need to control mine. I'm
evidence
getting a
that
little
the
bit
labor
too
market
excited.
is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing,
Here it goes, pull it back.
and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So,
Break even.
what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider.
What's going on, Brenda? What's going on, Forrest? What's up? What's up, Muhammad? I do agree. So this is moving pretty quick.
Thank you,
This
Mr.
is
Chairman.
very
Steve Lee from
volatile.
CNBC.
Not recommended for
Can you
beginners.
talk about how you factor in the variable lags on inflation and
again, for those that ever ask, what is it like, Ricky, to watch you trade live every single morning with the Learn Plan Profit Group? Again, not every morning is like this. Not every morning is this volatile or this active. But when opportunity does present itself, this is what it's like. Our job is to take action when it makes sense, to take action when an opportunity presents itself. And that's exactly what we did. If you were here for the entire live session, we prepared, we waited for the dip, we got into it. We bought into it. Once we got confirmation, I added more to it, and now I'm reducing my position size. I'm explaining my thought process throughout the day. Imagine experiencing this every single morning.
Decisions.
That is what
Then
my Learn
changes
Plan
in financial
Profit Group
conditions.
gets to experience every single morning. There's nothing else to it. It's exactly just this. It's a raw live trading session. No fancy bells and whistles, just me, the market, and my positions. And I work with my team every single day. There it goes, reducing my position size once again. So again, if you guys want to join my Learn Plan Profit Group, you guys don't have to. I'm not here to convince you to. If you want to watch me trade live, just like this, every single morning, right at market open, you have one option. It's my Learn Plan Profit Group, and it's the second link in the description down below. Right now, we're running one of our biggest sales, and it's $100 off the Learn Plan Profit 2.0. If you want to join my team, sign up, and you can watch me trade live as soon as tomorrow. You get access to, just for those that are unaware, you get access to all of this. You get access to our A to Z video lesson library that's designed for complete beginners, my daily live trading session, private group chat, and access to my TechBuds HQ, which is a 7,000 square foot facility that I bought in Chandler, Arizona. It's a one-time payment, lifetime access, and yes, it's $100 off, and you get access to all of it. We're actually even updating our course right now and adding a shorting section. And unlike other people, I don't charge extra for when I update it or add things to it. It's all inclusive. If you pay for it once, you'll never have to pay for it again.
Is
and
to
again,
move our policy rate to a
second link
restrictive
down
level
below.
that's restrictive enough to
Here it
bring
goes,
inflation down to
reducing
2%,
again.
where we have confidence of that. And what you see in the SEP numbers is people's views as of
All right,
as of today,
approaching
as of
previous
this meeting,
resistance.
as to the kind of
What do you
levels
guys
that will
think
be
I'm up? What do you
appropriate.
guys think I'm up on the day? Let me
those
hear it.
will evolve over time, and I think we'll
All right, reducing.
we'll just have to see how that
Woo!
goes. There is a possibility certainly that we would go to a certain level that we're confident
There
in and
we
stay there
go.
full time.
All right, you guys ready for this?
But
I don't
we're not
like
at
to
that
trade
level. Clearly
with
today,
my
we're just
P&L on, watching my P&L. I don't know about you guys, but it influences my decision to trade too often. I want to remove every and any distraction. So at the end, I should be able to see how much I'm up. We bought into this. We prepared for it. We dollar cost average. You guys all saw it happen live, and we are up a total of $27,000 on the day. 27,000. That's what we made today. And we're reducing our position size. There it goes, $28,000 on the day. Bada bing, bada boom. We are up 4%, but it's all about the trade opportunity. We bought into the lows. We're selling into the highs. That is an 8% move. This doesn't happen. Let me be very open with you guys. I'm not going to pretend like I do this every single day. What did we say all week? Wait for a day that an opportunity presents itself. Every video, I was like, hey, Monday might not be worth trading. Tuesday might not be worth trading because of this FOMC meeting. This is why it's so important. So I don't know who called it, but I did see someone call out a 27K day. But we're 28K and printing. But again, the day is not over. So I will remain with 11,000 shares. I'm going to continue to hold that. But that's the beautiful thing about knowing how to trade in the market. And I didn't start trading with this large of a dollar amount, just so you guys all know. But it's a simple concept that you start with a small dollar amount. All I'm doing from your trading account that might be a little bit less versus my trading account is that I trade with a little bit more money. But just like any business, you start small when you have a good set of working systems, and then you scale it. There it goes, $31,000 on the day.
One thing I would point to that's different this time is that
here it goes.
Part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles.
Here we go, approaching
And
$26 a share.
If those things start to get better, and we do see some evidence of the beginnings of that. It's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve.
Here it goes. Never afraid to sell. Never afraid to sell.
Inflation. So let me just say how much these factors will turn out to really matter in this sequence of events.
There we go, selling another, and we're right back to 11,000 shares, just like we expected. $32,000 on the day.
Increase in unemployment and a soft landing would be very challenging.
All right, get ready for the pullback. It's going to pull back. We all know that.
Recession, or if so, how significant that recession would be. That's going to depend.
There it goes. Ready for it?
How quickly wage and price
Let it pull back. Welcome it. Embrace it.
Come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Are vacancies still at the top of your list in terms of understanding the labor market and how much?
Here we go. Let it pull back.
Yes,
Let the sucker sell off.
Vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from
we
other
prepared for
cycles
this. Let it pull back. Let it pull back.
Generally, the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value.
You know what's my single best indicator? Jerome Powell, because anytime he speaks, he moves markets. Check that boy out.
Nick Timmeros.
And again, I see people asking, Ricky, how can I join LPP to watch you trade? It's the second link in the description of this video. It's that simple. Second link in the description of this video. It's my Learn Plan Profit Group. It's $100 off right now. And if you want to join, then again, you can watch me trade live as soon as tomorrow. It's lifetime access. It's a one-time payment. Just want to make sure that you guys are aware. I'll try to pin it for you guys here in the live chat. Let me see if I can get it for you. So again, $100 off, Learn Plan Profit, and you can watch me trade live as soon as tomorrow. So we have a handful of our LPP traders here. Again, you can see what it is that they're saying. I think it's a fun environment. I love having a team that holds me accountable, and you surround yourself with people that uplift you, and that's always the goal. So all right, here we go. I just pinned it also in the live chat, so you guys should be able to see it. There it goes. Market is pulling on back. I just pinned it in the live chat so you guys have access to it. It's $100 off, Learn Plan Profit 2.0, and you're ready to go. All right, if you have any questions before signing up, feel free to message me via Instagram. Feel free to message via Discord, and all of that is linked in the description of this video. If you don't see the links, refresh your screen and go into the description. You should be able to see all of it. All right, looks like we are making higher lows. It's beginning to show signs of a support. But I'm not going to get too excited because this thing can still pull on back to the moving average.
Be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for
There we
the
go,
opportunity.
buying
I just want to be
63,000.
clear on this. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we
That's a good
make
question.
one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, we're going to make that decision at the meeting. We didn't make that decision today.
Volatility
We
is
didn't vote
wild.
on
I
that.
agree.
I would say that, we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly. And that's what we're thinking about.
So just as a
How you doing,
follow-up,
Magda?
about the sort of risk
How you
management
doing?
considerations here, given there's some discussion now of overdoing it, what's the incentive to continue front-loading right now? Is it
My
lack
first
of
time. What's
progress
going
on
on,
inflation
Maria?
seen in the
Welcome,
CPI
welcome.
reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is
What's
running
going on,
now,
Ruler?
if you look at it on a
I
3,
appreciate that,
6,
man.
and
Thank
12
you.
month
Or Amber.
trailing
Women,
annualized
I
basis,
don't know,
you'll
but
see that
appreciate your time.
that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to
Showing signs of
continue,
a support.
and we can keep doing these.
You guys see how we're trading around the same range?
Large increase as we approach the level that we think we need to get to, and we're still discovering what that level is. But people are
So
writing
again,
that
I'm going to
down
close this so I
in their
focus on the
SEP,
actual
where
trade.
they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby.
Thank you, Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025?
I'm going to leave it at that. No more averaging up.
As early as 2024. And does that
What's
mean
going
there's
on,
a
Daniel?
level
Looking
of
forward to join. Looking
inflation,
forward to having you as a part of the team.
above the 2%
If you have any questions,
target
message me.
that the Fed is
Instagram or Discord. It's
tolerate?
linked down below.
So I guess core is at 2.1 in 2025 and in the median and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not, I mean, I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you have to, you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed.
Watch for the resistance,
to getting
25.50.
To
Watch for the break.
Stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
Beginning to reduce my position.
What we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now and not something I expect to be considering in the near term. It's just, it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
That's good to know.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global
4.2K
tightening
from,
around
yeah,
the
I
world
like that.
creates a
Congrats.
risk of a global recession that's worse than
Show
is necessary
P&L?
to
Should
bring
we
inflation
show it?
down.
Should
How
we
do you
show
see
P&L?
that risk?
We showed it a little while ago.
Coordination with your fellow central bankers.
All right.
And is there much risk of overdoing it? On a global level?
28,000, 27,000.
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back
Is that
from
good?
one of our frequent trips to Basel, Switzerland to meet
I
with
get too
other
excited when I
senior
see it.
central bank officials from around the world. We are in pretty regular contact and we exchange, of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment and price stability, but we regularly discuss what we're seeing in terms of our own economy and international spillovers, and it's a very ongoing,
boy, I like
constant
it.
kind of a process. So
Here we go.
we are very aware of what's going
Ed
on
1K, thanks to Ricky.
other
What's going on,
economies around
Edgar?
the world,
Congrats.
what that
It's
means
all
for
you,
us,
homeboy.
and vice versa. The forecast that we put together, that our staff puts together, and that we put together on our own, always try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about, the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world
There
where
it goes,
people have
making
very
new
different
highs.
levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times, but really we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Again, go into retest that 25.50 resistance.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher.
So we had a good question. Someone asked, how is it that you knew that there was going to be a resistance at 25.50? It's not that I knew, it's that I saw consolidation happening in that area. You can look at level 2, you can read the tape, and you can see that there's too much selling pressure on the ask at 25.50. So again, it's just understanding what to look at significant levels. And this gets easier with time. Just want to make sure that you guys are aware. You're never 100% certain. You can just see indication of something.
Why is the economy, in your view, so resilient? And does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on
my first
on
1K
interest-sensitive
day,
spending.
John Armstrong.
I think
Congratulations,
through
homeboy.
exchange rates were having an effect.
How many
on-
points is the
on,
interest rate hike?
exports and imports.
0.75%.
I think,
just like last interest rate hike.
So all of that's happening, but you're right. It's just, and we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although
There it
not as
goes,
much
getting
at the
rejected,
lower end
same
of the
resistance.
income
Be
spectrum, but
careful
still
here.
Some savings out there to support growth. The states are very flush with cash, so there's a good reason to think that this will continue to be a reasonably strong economy. Now the data sort of are showing that growth is going to be below trend.
Here it
this year.
goes.
I think of trend
A lot
as
of
being
momentum.
about
There it goes.
1.8% or in that range. We're forecasting growth well below that, and
Watch
most
for the break.
forecasters are. But you're right. There's certainly a possibility that
All right,
that growth could
reducing.
be stronger than that. And that's a good thing because that means the economy will be more resistant to a significant downturn.
$26
but of
resistance.
course, we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we.
So I see Christian saying, Ricky, I was down $800 and right now I'm $650 up. Thanks for the tip.
And you see that
all you.
in the
all you
in
that
the
made it
S&P,
happen.
in the levels of rates that we'll be moving to.
I'm just here to
reasonably
share my
quickly.
thoughts.
Assuming things turn out roughly in line with the S&P.
All right, pulling back, same
So
resistance.
that's how we think about it.
What's the poppy noise on your stream? It's when my orders or alerts get triggered.
Thank you, Mr. Chairman. In
So,
a world of euphemisms,
if we break
that
above
live
this
in here
and I
with,
set my alert,
below trend
it'll
growth
go
and
boop.
a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession?
Retesting.
4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then, given that the data you look at
Watch
is
for the pullback.
backward-looking, and the lags in your policy are forward-looking and you don't know what they
Tested
are.
moving average.
How
Watch.
will you know, or will you know, if you've gone too far?
So Will Hang
So,
is asking,
I don't.
how do you join your group? Again, it's either pinned in the live chat, and there's a coupon link. It's $100 off. It's one of our biggest discounts, or it's the second link in the description of this video. So again, you could refresh your screen if you don't see it, but you can pop out the description. You should be able to see it.
We're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. That's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working.
I like that,
but
Christopher.
The real point is this. Inflation, what we hear from people when we meet with them is that they really are suffering from inflation. And if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation. And that's what we're doing. And
Nope.
we certainly don't hope, we certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to
Camera
hypothetically
overheated.
deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris, Rugaber.
Thanks, Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability. And you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion. And this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away.
Watch for the break below.
We have to get supply and demand back into alignment. And the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much. And that was enormously beneficial to the public that we serve. And we have to get...
Huge shout out to Josh, 8.6K on the week, LPP member since 2019. Love that.
Back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So, I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs.
Same resistance, 25.50.
Quite a lot, but at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control, and that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions, and you can see what we saw
exactly
in
waiting for a breakout,
19,
waiting for a breakout or a break below,
which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen in since we started keeping track of that. So We want to get back to that, but to get there, we're going to have to get
Watch.
supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the
Selling pressure.
concept of high inflation becomes entrenched in people's economic thinking
More
about their
activity is
decisions,
getting pumped in right now.
then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Lower lows. We're in power hour. For those that are unaware, we have 50 minutes left until the market closes.
Powell, Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if
Thank
you
you
could
for such
elaborate on
excellent
what you
advice
mean
all
when you
week.
say
I closed my
reset,
SPY position,
and, what you think it will
$2,500.
take to
Mike,
actually get there.
I appreciate you giving me credit, but let's be honest, it's all
when I
you.
say
Very happy
reset,
that
I'm
you
not
walked
looking
away
at a
with
particular
$2,500.
specific, set of data or anything. What I'm really saying
Love to
is
see
that
our
we've,
team
we've
win.
had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before you even selling the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals.
Let it bleed.
And, that's a
Let
good
it
thing.
bleed.
For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level.
Let it bleed.
At a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where
I like that, Joe.
It's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots
There
and
it goes.
workers and materials and things like that.
New
But
lows,
from a sort of business cycle
24.50.
standpoint, this
Previous
difficult
support.
correction should put the housing market back into better balance.
There it goes. In the red,
Shelter rate is such a
24.50.
large part of this hot CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
I think that shelter
Appreciate that, Jim.
inflation is going to remain high for some time. We're looking for it to come down, but it's not exacally clear when that will happen.
There it goes, indicating signs of an uptrend.
so
Gonna step on the gas a little bit
It
more.
may take some time. So I think hope for the best, plan for the worst. So I think on shelter inflation, you just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question. Hi, Jean Young with Market News. You've
All right,
talked about
last
the need
question,
to get
guys,
real
last
rates
question.
into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
Sure. So I think if you look, when we
Watch
get
for the
to,
drop.
let's
We're
assume we
dropping
do
below
get to that
24.50.
level, which I think is likely. What you're going to do is you're going to adjust that for some forward-looking measure of inflation, and that could be, you pick your measure. It could be, there are all kinds of different things you could pick, and what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, we've written down what we think is a plausible path for the federal funds rate. the path that we actually execute will be enough.
Woo!
It will be
Let's
enough
see
to restore
it.
price stability. So this is
Getting
something
rejected,
that, as
getting
you can see,
rejected. All right.
moved up,
I need to
and we're
chill
going to continue
out.
to watch incoming
Up
data and
2K.
evolving
I
outlook
like it.
and ask
Congrats,
ourselves whether
baked
our
potatoes.
policy is in the right place as we go. Thank you very much.
All right, there it goes. JP. And that is it for that live stream. Watch the market recover for Power Hour. Nothing worse was said. Therefore, markets should naturally react in a positive way. All the selling pressure that we saw today, yesterday, and the day prior, again, the FOMC meeting is done. And this happened shortly after. Nothing worse than expected is being said. Someone asked me, Ricky, why are you buying the dip and not shorting? The same reason on why we prepared for the market to dip. We bought into it. Again, you must have missed it. We bought into this. We prepared. It indicated signs of an uptrend. I stepped on the gas, and that's when we made the big bucks, right? That is when the money is made. Not when we're at all-time highs. Not when we're showing signs of a resistance, right? But you prepare in advance, not because you're guaranteed to be right, but because the risk to reward ratios make sense. You wait for confirmation to step on the gas, and then you step on the gas, boy or girl, right? There it goes. Up $40, quite happy. Again, we all trade with different dollar amounts. The whole point is, do you understand what you did? I don't care if you made $1. I don't care if you made $10,000. The idea is understand what it is that you're doing in this market. Understand why you bought. Understand why you waited for confirmation and then you bought more. Understand why when it was indicating signs of a resistance, you reduced your position size. That's all I want from this. It doesn't matter about the dollar amount because the dollar amount is irrelevant in the grand scheme of things. You're trading to learn right now, not trading to make a profit. At least you shouldn't be. Imagine going to school, going to college for your first year and expecting to get paid. That's the expectation that a lot of beginner traders have. But think about it. You're not trading right now what you think you can trade with 5 or 10 years from now. So why are you trying to make the most money now, implement bad habits, and expect a return? No, just like a business. You start small, you fail quick. You make progress, and over a period of time, you build an understanding of what to do and what not to do. And then you scale that business, right? It's a beautiful thing. So you're $40 today. I don't know with what you trade with. Maybe it's $500, maybe it's $1,000. $40 doesn't sound too crazy, but $40 might be 4%. And 4% of $100,000 is $4,000. That sounds a little bit more attractive, right? So that might, excite some of you guys. It's all relative to the dollar amount that you invest, earns you a direct output of pay, right? Understand that this comes with time. You should not, I don't care if you have $1 million to your name. If you're an absolute beginner in the stock market, it makes sense on why you're trading with a small dollar amount. You're going to make mistakes. Fail quick, fail small with a smaller dollar amount. You're going to make mistakes. Embrace it. Welcome it. Just make progress. You'll never be perfect. You'll never buy at the bottom. You'll never sell at the exact top. Please, please, please understand that. Look out for yourself. There goes $26,000 on the day, and we're barely up 2% on TQQQ. This is the beautiful thing about day trading is understanding that it doesn't matter how much the stock is up or down. It matters about the volatility within the day, the low points, being able to dollar cost average into it, add more to it, reduce that overbought levels. You wait for the pullbacks, you buy into those, you sell the highs. Never be afraid to lock in profits during an uncertain time. Again, you guys got a taste of what my Learn Plan Profit group gets to experience every single day. I'm going to say it one more time. If you want and if you liked what you saw today, I do this every single morning. I trade live like this every single morning. Now, let me make sure that you understand. If the morning is choppy, if the morning is slow, then I don't trade as much as I did right now. My job is to trade when an opportunity presents itself, not when I think I should, right? Or when I want to. So I show up every single day, Monday through Friday. If the stock market is open, I am live with my Learn Plan Profit team. I do not offer anything else. It's the second link in the description of this video, and it's $100 off. Or it's pinned in the live chat. You should be able to see a pinned thing that says LPP 2.0, $100 off. It's one of our biggest discounts. And again, it's a one-time payment. It's lifetime access, and you get access to all of it. A to Z video lesson library designed for complete beginners that was just updated, and we're adding a new section, and it's all included in it. Daily live trading session, private group chat, and access to the TechBuds HQ. Make sure that if you have any questions, you feel free to message me via Instagram or via Discord, and everything is linked in the description of this video. I heard some of you guys comment on my flags back there. Those flags are from my Shop TechBuds site, and if you use promo code FED, F-E-D, at checkout, so let's say that you want the Hustle to Inspire flag, you can buy as many flags, you can select your favorite items, and you guys will get 25% off your entire order. Just use promo code FED in observance to the FOMC meeting. So again, that's at shoptechbuds.com. It's the fourth link down below, and that's really just it. So for all those that are part of my Learn Plan Profit group or that joined today, I'll see you in tomorrow's live trading session. Again, that's that second link down below. Feel free to send me a message via Discord. That's that first link down below. Don't forget to follow me on Instagram. That's that third link down below. Make sure that you subscribe. I upload new videos every single day. Drop a thumbs up. And if you're asking what trading platform I'm using the Webull trading platform, and that is the fifth link in the description. I appreciate you guys' time. Again, if you don't see any of the links, refresh your screen, and they should all be provided for you in the description. You will be able to see a rerun of this live stream, and if you want to see, even before you sign up for LPP, if you want to see when I bought, how I waited for confirmation, when I sold, and what led to my $26,000 day, feel free to watch it. I think you're gonna have to give it 30 minutes for it to re-upload, and then it should all be available for you guys. Watch it, even watch it for you. If you like what you see, great. If you don't like what you see, then guess what? You don't have to sign up. That's the beautiful thing, is that you get to decide. Decide who you choose to work with every single day, because I know I show up with my Learn Plan Profit team. I appreciate you guys' time. It's a common W for all of you guys. If you guys have any questions, you guys know how to reach out to me. Like always, let's make sure that we end the year on a green note. Take it easy, team.